Well, thank you very much, both of you, to be here with me on stage to talk about, like, interoperable ecosystem in Africa. I guess, like, before we start, right, talking about interoperability, I just would like to set a bit the scene and what we are effectively looking at, right? So when it comes to cross-border payment, actually a roadmap has been set by the G20, and like we have the Financial Stability Board also like focused on how we make cross-border payment more seamless. Some KPIs have been published, I think like now 2 years ago, and regularly, like, we have report around progress to achieve this KPI, right? In fact, like the latest report was published end of October, and the report reveals that in 2024, only 24.7% of payments in Africa settle within an hour at the beneficiary leg, and 75.6% of wholesale payments settle within a day. This is the lowest all across the world, right? Globally, nearly 1/4 of corridors exceeded the 3% target. So the 3% target is actually like, the cost target being set. And again, Africa, most of the corridors in Africa are the most expensive one, right? And improvement in services across the region. Again, Africa being like, one of the lagger in this space. Access challenges for MSMEs persist. I know it's one of the focus for COMESA, right? Mike, I'd like to start with you actually, with Swift's close involvement in market infrastructure. What factor do you see behind this result in Africa? How do you explain this?
It's a challenging one as well, I think. To have Africa lagging behind, but I do wonder when we look at those figures. A lot of markets tend to focus, definitely when they're building their new infrastructures, domestic first, then their friends and family, people who are on the kind of neighborhoods, and then finally looking to kind of think about that global speed and scale and so on. But typically, where we see that inbound payments are slow. We did a little analysis and published it 3 weeks ago. It's really interesting to see, if you think about it, across the top 40 countries in the world, looking at the in-flight processing time, so how long things take to reach the country, and then what happens in the final beneficiary leg. So the actual credit, the banks receive the money, or the financial institutions receive the money, but then takes time to credit into the beneficiary's account. And there's a few things behind that typically. A lot of the times, particularly for countries with exchange controls or capital flow measures, they have quite a lot of regulation around how they treat a cross-border payment very differently from a domestic payment. And that seems to be a kind of key challenge that people are facing. Another one is the processing hours of banks. When we look at countries that are really good at crediting, they've got systems running 24/7, fully automated, that are able to do that crediting regardless of the time of day. In Africa, sometimes the volumes are relatively small. And so that automation, or the ability to make the business case for automation, is often missing. And that's not unique to Africa. Of course, we see that in Latin America, and we see that in Asia in many cases as well. So it's tough. One other thing, particularly for financial institutions with core banking platforms, they're often batch-based, right? Particularly the older generations of core banking tend to be batch-based, which means they process, when they open in the mornings or X number of times a day, which really contributes a lot to making sure things are slow. So it's not the cross-border leg. It's not getting the money to the country. It's the processing into the account at the end of the day. That's something we need to figure out how to address.
Okay, thank you. And in fact, like, I forgot to ask one thing. Apologies for this. I'm so used to deal with Swift that for me, I always assume that everybody knows about Swift, but perhaps could you introduce a bit more like who Swift is?
Sure. For those of you who've never heard of Swift, we're a cooperative, so not-for-profit cooperative established in 1973, owned by the banks that are our members. And we exist to create an interoperable world. So we were established originally to fill the gap that was there where people were exchanging messages via telex back in the day. And somebody said, well, why don't we put together an organization that can build a network to replace that? You know, when we started to build that network, of course, nothing equivalent existed. And so we've kind of gone through the years with this mission to make the world's financial ecosystem interoperable at a global scale.
Okay, thank you. Jedida, I'd like to get your take on the result as well, and understand like if some of the factors that Mike mentioned around like, you know, core banking system being BAS-based, GFM, are things that you experience as well within the COMESA region.
Thank you for this opportunity and for having me back on stage. I just want to comment on something that Mike said, and it's something that we see quite often when we're doing our cross-border payments within COMESA. And that's the fact that the problem is never the actual cross-border transaction. It's the application on the other side. And it's very unfortunate because a payment will be made, the receiving bank will have the money, the customer will not. And only when a follow-up has been made and the response comes to say there was a compliance issue and the money is sent back. And a lot of time is lost and the goods probably will not be released. So those are challenges that exist and we see them. Now, from the statistics that you have spoken about, it's not surprising that Africa still lags at the bottom. And I think it speaks to speed issues that we have. It means we still have significant inefficiencies, either in our infrastructure or in our processes. And we see a lot of, there's a lot of efforts and a lot of initiatives that are taking place to improve our systems. So why is it that we are still lagging behind? And for me, it speaks to uneven improvements. So there's a lot of effort and improvement and strides that are being made, but there's a lot of us still lagging behind and not catching up. And when you put us together, we bring down the average, and that's where we are reporting such statistics. Another thing is that it is a worry because for us, for example, in COMESA, we have now seen one of the biggest constituents are the MSMEs who are driving economic growth and are promoting trade, job creation. Now, the fact that these are the statistics we are reporting, it means we are stifling their progress, we are stifling job creation, we are stifling growth. And cost aspect still remains an issue because one of the reasons why we are still posting such low figures is because of the cost of doing cross-border payments. There's a lot that has to happen because of currency convertibility. So these are challenges that we are facing today. On your second question about some of the things that Mike spoke about that we may be handling within COMESA, I think one of these is technological advancements to try and cover the gaps that are coming up. And we did speak, I think when we listened to the presentation that was made earlier, I think that is one of the key things we are trying to do, give a bigger value proposition to traders, to COMESA, to MSMEs, and offer them a lower cost platform and one that is inclusive.
I just would like to go a bit deeper on what you just said, right? And understand based on your presentation earlier and what you're sharing now, it feels like some of these KPIs that have been set really drive your strategy, particularly around cost. Is it a fair assumption?
Thanks for that. For us, those KPIs actually help drive our strategy. Data is key to how we move forward because we could come up with the best platforms or the best infrastructures. But if we are not informed by data, then who are we addressing? So if we see that the data is speaking to costs, data is speaking to accessibility, is speaking to time delays, these are the things that we need to work on. So we have the KPIs, we have the global benchmarks, and then we have our status of where we are. And then we say, where do we want to go from here? So they do inform our strategy in that respect. And some of the things that we are doing, perhaps to try and improve these figures, is one, like I said, technological advancements by working both on a sort of a wholesale payment platform, which we already have, and we call this the regional payment and settlement system, which has been there for over 15 years, but it's time now to enhance it and give more value proposition. And of course, now going deeper to a digital retail platform. Now, secondly, I think one of the things we have realized we need to do is to harmonize our frameworks, regulatory frameworks. It's a very difficult subject to talk about because from one jurisdiction to another, you can imagine trying to have standards within a jurisdiction is difficult. Now try to harmonize them across borders. It's quite a challenge. We as COMESA have now brought a discussion to the table to say, can we identify the gaps that exist amongst for regulatory frameworks amongst ourselves as central banks and as institutions in the payment ecosystem. So that's a discussion on the table. It's not going to be easy, but we hope we are going to do it. So those are the two main issues that we are doing. Thirdly, we are trying to, let me not say we are trying, we have started strategic initiatives. For example, we are, as the COMESA Clearing House, we have an agreement now with PAPS, with Afrexim Bank or PAPS, to try and see how best we can work together, leverage on each other's rails, and drive up these volumes and increase these KPIs, for example, make them better, work with the different stakeholders to try and make sure we are not duplicating the efforts that are already taking place, and how best then can we serve our people.
It's interesting you mentioned effectively, like, the work you're doing with PAPS, right? Because one of the recommended strategy by the CPMI to meet the KPIs has actually been to leverage the existing infrastructure and creating link between these infrastructure, right? Mainly they were thinking of domestic instant payment system, but regional are also like, its own effects. And in fact, like, there are different type of link, but the one like which is often seen is a regional link. However, like, if you think of linking domestic system, this system were never initially designed to process cross-border payments, right? So it presents a set of unique challenges to be able to do that. Perhaps, like, could you share a bit more around, like, the technical and non-technical challenges? I know you mentioned regulatory alignment, but yeah, perhaps a few more.
The domestic systems that currently exist, and like you've said already, I did talk about the regulatory challenges, frameworks, and having them all corresponding and aligned. Now, with the recommendation to say, let's connect domestic payment systems to hubs so that they can now work across the region. That, of course, like you say, brings some challenges. What are the standards? How do we customize the standards of this hub to make sure that they speak to the domestic one? I try to imagine, if I could sort of put an analogy to this, to say, imagine you have a vehicle, a car, that has a capacity of 4 people. And each morning, you're required to pick up children and drop them off at school. Now, over time, you're now required to go to pick up children from a different location, drop them off at school. So your capacity now grows, and you now need something that will take maybe 10 people or 15. Now, do you say, let me keep the vehicle that I have, which takes 4 people, and the solution that I will have is attach maybe a caravan to it or something, or do I buy a vehicle that will take 10 people? What are the considerations that you need to make? Because if you are now going to say, let me attach something to increase the capacity of my vehicle, there are so many things. Will it be licensed? Will this vehicle be able to pull the caravan? So there's more challenges to that, as opposed to just saying, let me get a vehicle that can accommodate everybody. But because of our circumstances, sometimes it's difficult to go for the easy way out. You need investments, which will cost. You need time. to get those investments and be able to invest in what looks like a more easy solution, which is just developing a cross-border payment system. So we have no choice but to try and see what works best for ourselves. So that is one where we are saying, what are the challenges? One is the cost issue. Two, the regulatory frameworks, again, standardization of policies across the region. Number three is how easy will it be to then make sure that you can, the market is ready for you on the other side. So it's easy for us to put our domestic system on a hub to be able to do cross-border transactions, but how easy will it be for the market on the other side to then accept that? So I think those are some of the technical challenges. Now, on the non-technical side, I think one of the things that comes to mind is competition versus collaboration, because now you are bringing in domestic players, not just banks, but financial institutions, fintechs, all to one table, because you're now sort of creating some equal playing ground. And how do you ensure that we are not stifling innovation by allowing these there? And how do we balance competition and innovation? And of course, the cost aspect as well. It may not be technical, but these are discussions that we will need to have. So that's what comes to my mind.
Thank you for this. Mike, you mentioned it earlier when you introduced SWIFT that interoperability is one of the key focus of SWIFT, right? And I think in this context, because often Mojaloop sits at an intersection, right? For us, interoperability has two meanings. One, it's about how payments flow between one system to another seamlessly. And that's why SWIFT focus on. And the other one is how we create a venue which is accessible for all type of DFSP, right? For this specific question, I'd like to focus on the first meaning of interoperability. So across different geography, how you link the system. And if from where you sit, you see interoperability between system intra-Africa easier than with other parts of the world. I think you prepare some slides, Simeon, perhaps could we get the slide on the screen?
Do I have a clicker? Or I've got some animations, makes it easier. Thank you. So maybe let me quickly talk about interoperability and the way we think about it at SWIFT. So we tend to see an awful lot of discussions about interoperability, but we also tend to see them in silos. So RTGS interlinking, typically the space we've played is high value payments originally. And in Africa, Central Americas, we've been working on RTGS interlinking for more than 20 years, pretty much. The topic of the moment, the hot topic at the moment is instant payment system interlinking, of course. Key discussion here, mobile money interoperability as well, DLT networks, so the distributed ledger technology interaction or interoperability as well, and wallet ecosystem interoperability. But what we tend to see is most people think about these only in terms of interoperability within each of these individual ecosystems. Where SWIFT comes into is we think about this problem of how do we solve interoperability between different networks and ecosystems, because we think that's key to making things open and value to flow freely across all of them. So in our thinking, we've thought, well, what can we do? Or how do we think about this problem? And we've got these building blocks kind of concept that we've come up with, which is about kind of maturity through different layers. And we touched on regulatory interoperability, for instance, and so on. But let's start at the base with core interoperability foundation. There are a number of things that can be built into every system. I'll give you a good example. We have this thing we call the unique end-to-end transaction reference number, or UETR, typically, which we think is absolutely critical to embedding in every transaction as it starts its life. Because when the transaction crosses multiple systems, we're able to trace things from end to end. That's one example. There's a number of other things in that core interoperability foundation to do with things like pre-validation, exposing data from a domestic market to a cross-border market so that a payment instruction can be built appropriately. Then we've got harmonized standardization. We're going to talk about that later today when we get on to ISO 20022. So I'm not going to touch on that. And then rulebooks that sit above this, orchestration and operations, maybe higher up the stack, we could switch around with business rulebook depending on the approach, and then all under oversight and governance, which is particularly key because governance is probably the most difficult thing. And when we think about how this kind of fits in, hopefully, need some help to go one step further. There we go. When we think about why this matters is because if you want to scale interoperability globally, I mentioned earlier, most people start, Julie mentioned as well, when people build domestic systems, they never think about interoperability from the start. So they have to retrofit things when they start to do that. And often they only do it with friends and family, their neighboring countries, because those are the things that make the most sense. But if we bake in things right at the beginning, we can accelerate development as we go through the stack, and reduce the cost of upkeep and so on through the entire life cycle and achieve global interoperability, which is where we're really going. Let me put this into a little bit of context. I've changed the pyramid into a pizza, and why this matters and comes back to my original slide. The objective we want to see is that all of these different types of payment systems come together, and if we get the center part right, actually, it means that harmonized standardization, core interoperability foundation enables the seamless flow of value between all of these networks together. Okay, sorry, let me go back there. Sorry, you asked me another question.
No, thank you. Thank you for this. I asked you about, is it easier to create interoperability within Africa or with the global? But before you mentioned this, actually, it's interesting because I've noticed between the two answers that some of the key agreements are the same, but labeled differently. You mentioned harmonized standard when Jedida mentioned data, right? And the concept around standard is actually how we make sure that the data flow from one system to another. And another thing I'd like to echo a bit is, especially with the discussion we had yesterday, so what you mentioned pre-validation as a key ingredients as well, right? In the Mojaloop world, pre-validation is a lighter version of what we call our agreement of term phase, where we validate, completely the payment and have the beneficiary, the beneficiary agent agree on the payment before the payment is received. So interesting to see different type of organizations thinking about.
I think we need to think about the pre-validation. It's actually it's a data sharing thing. So scheme owners, market infrastructures need to share certain data beyond their borders to make pre-validation work. So this is not at the technical level. This is a data sharing question that needs to be enabled to make things share. I can answer your question quickly on easier with Africa, your next door neighbors. If we get it right from the beginning and build that interoperable foundation correctly, it should be as easy to go to your neighbors as globally. And I think that's where we need to go, because if we think only in the context of our neighbors, when we get to the kind of global basis, which is ultimately vital, and where those KPIs are really being impacted, the G20 KPIs, we'll have to change again. That doesn't make any sense. So building regional standards makes no sense. Building towards global standards and contributing to global standards is really where the kind of long-term payback comes into play.
Thank you for this. Another point which was interesting on your slide is seeing different parts of the ecosystem. And this is where I'd like now for us to focus on the second meaning of interoperability, creating a venue for different type of DFSP, right? If you think of SWIFT, historically it's been seen as a network for banks by banks, right? So quite interesting to see other provider on your slide. So do you then envisage a future where non-bank provider could have BICs and network access to SWIFT as well? So in other words, how does SWIFT view the concept of creating one venue for all type of factors, especially in Africa, when you have significant presence of mobile money providers?
So let me start by saying, first and foremost, the view from SWIFT is that there will be multiple models of interoperability and there will be multiple rails, right? That's a fact of life. And some rails make more sense than others for certain scenarios or use cases. So we always have to remember that actually rail optionality matters. The option matters. What matters though is those fundamentals of interoperability again. So we come back to that. The BIC is used for addressing on Swift's network, but it's not restricted and never has been to banks alone, right? So we have lots of non-bank financial institutions with BICs that are addressable. We have lots of corporates on Swift network that are addressable as well, and use those services. And even I think earlier this year, we announced an integration with TerraPay for reach to wallets. So wallet ecosystems, I think a huge number of wallets are around the world accessible via Swift final delivery, but also other people like Wise. You might have heard of them, or TransferWise, which actually got their start at an InnoTribe event at Cybos one year, by the way, which is quite an interesting story. So we've kind of been involved in incubating and building some of those alternative networks as well. So absolutely, it's an open network. There won't be one network. There'll be multiples. How we work with multiple networks, that's the key to interoperability.
Okay, thank you for correcting my wrong perception. I guess Tejeda, moving to you, what's your strategy to foster this concept of vertical interoperability? So again, creating one venue for all type of DFSPs.
Thank you. So I think our focus has been so much on horizontal interoperability, which is between the various institutions, DFSPs. And now when we think of the vertical, I suppose, which is the different layers going up, I think the same concept applies as on the horizontal. But what I could add is for vertical, perhaps standardization, standard messaging, like what we are now doing with the ISO 20022, which will just give a standard way of communicating between the various layers of institutions or of payments. And then secondly, we could perhaps encourage more use of open APIs to just allow seamless data exchange between institutions. We did hear yesterday when somebody mentioned about, somebody from Rwanda actually spoke about transparency and accountability. If this is something that's present within our ecosystem, it just makes interoperability easier so that you're not getting fintechs feeling like they matter less than the banks. So transparency, accountability, I think builds trust generally within the ecosystem, and this makes interoperability much easier.
Thank you for this. I guess now, looking a bit at all the regional initiatives that you have in Africa, right? So you have PAPS, you have TCIB, you're gonna have DRPP for COMESA. You have the East Africa Payment and Settlement System in EAC region as well, right? And if you look at the volumes on some of the systems that are live today, they're relatively limited. So how is COMESA approaching this challenge of low volume and the presence of several regional systems?
The issue of low volume has been quite a concern to us. And we are using, like I mentioned earlier, data to try and inform our way forward. It's something that we have jumped onto rather late, but it's never late. Better late than never. And one of the issues is, one of the strategies is interoperability, which I mentioned earlier, to say work with existing systems instead of building something from scratch. Just take advantage of those payment rails. It will cost us less. It will make it quicker for us to reach the market. Now, number two is one of the ways is to offer incentives to drive up those volumes. And I can tell you that what we are doing with PAPS, with Afreximbank to be specific, is to offer trade financing within the system, within the regional payment and settlement system. So we are saying you do not just have to focus on making the payment, you have access to credit. And that credit will only be accessed or disbursed through the payment system. So that allows them to come on board. And then with our upcoming payment system for the marginalized and for the MSMEs, again, there'll be an option for credit. Of course, it will not be at the same level as the large trades, but we will have that option for credit. We will have the option to say we are offering you this at a much lower cost than what would have happened. And it will be as good as cash. That's how instant it's going to be. So we hope to drive up volumes with those kinds of incentives that we will give. So it's incentives, interoperability, and using existing rails to try and achieve those numbers.
Thank you. And I'd like to dig a bit deeper on this because I think yesterday Malawi was on stage as well, and Malawi is part of several of this system, right? So two things. One, do you see the overlapping as an opportunity or as a challenge? And second question is for DFSP belonging or operating in countries that belongs to several regional schemes, how would they decide which one to join?
That's a very interesting question. We have countries that belong to more than one regional economic community or regional bloc. And I'll give you an example. Rwanda belongs to the East Africa community and also belongs to COMESA. And this presents advantages and there's some challenges as well. And one of the advantages is that, first of all, you have a bigger access to market. So Rwanda is not only constrained to work with East Africa community, but can benefit from trades from the COMESA region, which now goes all the way to North Africa, Southern Africa. So that is one. Number two, being a member of multiple economic communities, you already have the experience with one, and you can migrate best practice to the other when you join it. And what you then do is you tap into the one that gives you greatest advantage. So those are the two advantages I would think of. There are challenges to belonging to several or to more than one regional economic community. One of them is the cost burden, because it does not come for free. There's fees to be paid, there's membership, subscriptions. That's number one. So it can be a burden. Number two, there will be conflicting achievement of goals. Because, for example, COMESA has its own standards that it tries to implement, whether it's payment standards, electricity standards. Now, East Africa community has its own standards. So how does a country like Rwanda now choose which standards to prioritize? Because each country has its own agenda. So that is another. And then lastly, belonging to different regional economic communities could also pose a challenge of somehow losing a bit of your control of what you would like to do, because now you have to try and meet the two. And I just remembered another advantage is that it allows you to have resilience. If, for example, Rwanda is having a challenge on the East Africa payment system, and some of those payments can be routed through the rails of COMESA payment system, then you're able to then still continue business as usual. So a bit of resilience is created in that respect. So there's both advantages and disadvantages.
Okay, thank you. And I guess Mike, again, you mentioned that Swift is bread and butter is interoperability. So how do you see yourself in this specific context?
Like I mentioned earlier, that we don't do domestic rails. We tend to focus on the international piece, so the bits between tying things together. So that's really important. But maybe two key areas that we think we can contribute in a special way. The first of them is because of the work we do in standards as a community good as well, kind of driving those standards. Again, we're going to focus on ISO later this afternoon. That's one of the many. But we think we've got something to bring to help make sure that those standards at least are interoperable at a global scale, to put Africa on the same footing as every other international organization, which we think is key. And the second area probably is on transparency. We haven't really spoken about that. But one of the things that SWIFT introduced in 2017 is that all banks that are part of the SWIFT network, and that's a network of around 11,500 financial institutions, update a tracker to give status on where a payment is from end to end. And there's two elements to this. One we call GPI, and then something also called universal confirmations. And that means that when that final beneficiary credit happens, into the creditor's account by the final bank, any bank that's a SWIFT member is obliged to report that back as well. That provides transparency. And that transparency is key as well, because it allows us to measure the end-to-end performance as well and understand where things are going wrong along that route as well. Having data provided of the entire payment journey end-to-end across all sorts of disparate systems, right? We use GPI across non-SWIFT networks as well. It means that we understand where we have bottlenecks, where we need to focus our attention. It helps central banks, for instance, use that data as well to understand in their own markets where they need to pull certain levers to help their communities to address some of the challenges on speed and performance.
Okay, thank you. I see we have like less than 4 minutes left. Any final thoughts or final insights that you want to share with the audience today? Yeah, of course.
Okay, thank you. Thank you very much. My final thoughts on this issue of interoperability of cross-border payments. We have a long way to go, and that is because our greatest challenge still remains currency convertibility. And once we crack that, which is what we are doing as COMESA and the payment platform that we shared, I think we'll go a long way. And what I would like to say in this regard is all of us seated here in this room have involvement in payments or in digital financial solutions. And the only way we can remain relevant is by adaptation. We have to continuously improve, adapt, and stay up to speed, because if we then don't, we'll become redundant. And that is what will happen to a lot of the payment systems, a lot of our payment platforms that are not coming to the table to then discuss issues of inclusive payments, issues of interoperability, and just issues of costs. So we have to be adaptable to make sure that we remain relevant. That's my take.
Thank you. Okay, we have 2 minutes left. Mike, do you have any final thoughts?
Well, no, I think we've kind of touched on an excellent summary there. Not much more to add. I think the key is collaboration and figuring out where we don't compete and doing things in a standardized way, right? There will always be room for competition and other things. I think in the level 1 project, they summarized that quite nicely. We shouldn't compete on standards and rails. And I think as well, we need to think about sharing data as well across borders as well to kind of make it easy to build payment instructions that cross multiple systems. Like I said, I don't think single systems or single loops or hubs alone will be enough, because they can only service the community that they connected to. We have to think about how to connect networks with network. That's the real challenge I see next, to create true global reach and change the game where we started this on things like the G20 targets and those KPIs and how we improve Africa's performance on the global stage.
Thank you. We have 1 minute left, so I guess if there is one question, we can take it potentially.
Yeah, hello, thank you. Mohamed Malim from RSwitch. My question goes to COMESA. So looking at, as you scale in the future, how much of a problem will currency fluctuation be? And if this is a problem, what are the things that can be done actually to basically minimize this impact and keep the cost down? Thank you.
Hugh, it's a difficult question, because our currencies have become, as time goes, they've become more and more unpredictable, sadly. When we started when the clearinghouse was first mooted many years ago in the 80s, currencies were stable. And what used to happen is we used to trade in local currencies for 60 days between countries, COMESA countries, and settlement would happen. Payment would happen on the same day, and settlement. But the actual payment of the dollars and the euros, dollars at the time it was not euros, of dollars and pounds at the time would happen after 2 months. And this worked perfectly because our currencies were stable. But it has become a big animal that we are not able to tame. So this will take time. Now, one of COMESA's objectives is to become a monetary union with one central bank and one common currency. So imagine the amount of work that is being done to try and achieve that. There's a lot of convergence that is yet to happen. And we hope that, with all the support, there's a lot of political will that is required. And we hope everybody will come to the table. When will that be achieved? Is it 2030? Is it 2040? But I think someday that will be achieved. So very difficult to say when we will achieve or we'll have the fluctuations under control. I don't think I got the second question.
No, I think that was it. Thank you.
Thank you.
Thank you very much. My question goes with respect to the building blocks Swift has highlighted, and probably what is COMESA doing with respect to leveraging the big community and these other small block regional areas, so that we have standardized frameworks or regulatory frameworks, so that interoperability, which is a challenge currently that has hindered the uptake of the REPs, for example, the volume of transactions, so that we can have seamless integration between payment systems. So I believe that there must be some initiatives being taken by COMESA to ensure that you harmonize the standards within the regions. So we would want to hear if there is any initiative in that area. Thank you.
I did hear there's a question for Mike as well, but I'll go first. Okay. So very big challenge in driving volumes on our current payment system, which settles in dollars and euros, because one, we are not an instant payment system. So we collect all these payments during the day between traders, and our motto is come as you are. It's not limited to trade. It can be, we process transactions as low as $10 and a ticket, one transaction of 5 million. So come as you are, we'll process your transaction. However, because of the model where we are doing net settlement at the end of the day, so the beneficiary is receiving money at the end of the day when the payment was made in the morning, this has kept our transactions low. And the initiatives being taken now is we are currently undergoing a system upgrade. We are about to start the system upgrade as well as the ISO 2002 migration. And this should help solve that issue. It will not make it instant yet because by their very nature, trade transactions are usually not instant payments. Unless, of course, they're, MSMEs, cross-border transactions. But big trades which have letters of credit and have other processes related to them are not instant. But we are working on those that are supposed to be instant, and that's why we are introducing the digital retail payment system. Now, the other thing on regulatory frameworks, like I said, first step is to identify the gaps. And this responsibility is to the central banks. And this is what the central bank governors have said. Let us identify the gaps that exist within our jurisdictions for regulatory frameworks, not just for cross-border payments, but even for CBDCs, the central bank digital currencies. We did speak about this yesterday, where it was said we might be moving too fast, way ahead of where we're supposed to be. Let's get things right now, and then we can move on to the CBDCs. But there's no harm in trying to find out what the regulatory gaps are at the moment. So these are the two initiatives we are taking now. And happy to say that on the system upgrade, we're also doing a 24/7 system, because we have different time zones in Africa, and there's no benefit in saying, because the settlement system has closed, because it's now 3 p.m., whether it's Harare or Mauritius, let's close trade. No, we want to make it available, having several settlement cycles and make the system available 24/7. Thank you.
The other question, I think, was about taking those regional standards into the global voice, correct? Correct? Okay, good. So we're going to talk about this later, actually, in the ISO thing. I think that I really want to answer that, because one of the key objectives I have is how to get Africa's voice to the table of driving global standards. This is a critical point as well. So I've got an ask for this audience later today as well, to kind of come and be part of that journey as we move forward as well, because there's lots to be learned from standards that are kind of built regionally, but we need to figure out how to lift that up and contribute to global standards as well, right? Thank you.
Okay. Thank you so much, both of you, for all your insight today.